Welcome to Bitcoin Boost. Today, we're diving into the world of Bitcoin ETFs. If you're looking to invest in Bitcoin, but you're not ready to go all in on a whole coin or deal with the hassle of a digital wallet, then ETFs might just be your golden ticket. We're going to break down the top 9 Bitcoin ETFs you absolutely need to know about. Let's get started. First up, we've got IBIT. This ETF has been gaining attention lately, and for good reason. Now, IBIT is interesting because it's not directly holding Bitcoin. Instead, it tracks Bitcoin futures contracts. These futures contracts are essentially agreements to buy or sell Bitcoin at a specific price on a future date. This means that IBIT is more about predicting Bitcoin's future price rather than its current value. This can be a good thing or a bad thing depending on how the market moves. If the market is volatile, futures contracts can offer a way to hedge against sudden price changes. On the plus side, it gives you exposure to Bitcoin without actually owning it, which can be less volatile than holding the coin directly. This can be appealing for those who are cautious about the wild swings in Bitcoin's price. But you also miss out on potential gains if Bitcoin skyrockets. If Bitcoin's price surges, the returns from futures contracts might not match the gains from holding the actual coin. Think of it like renting a house versus owning one. When you rent, you get to live in the house and enjoy its benefits, but you don't build equity. You're betting on the price of Bitcoin going up or down, but you don't actually own any yourself. This means you won't benefit from the long-term appreciation of Bitcoin. So, is IBIT right for you? It depends on your investment goals and risk tolerance. Well, if you're looking for a more hands-off approach to Bitcoin, and you're comfortable with a little bit of risk, then IBIT might be worth considering. It's a way to get involved in the Bitcoin market without the need to manage a digital wallet or worry about security. Just remember to do your research and understand the fees involved before you invest. Fees can eat into your returns, so it's important to know what you're getting into. Always read the fine print and consider consulting with a financial advisor to make sure this investment aligns with your overall strategy. Next, let's talk about BitB, an ETF that offers a unique approach to investing in the Bitcoin ecosystem. Now, BitB is a bit different from IBIT because it doesn't just track Bitcoin futures. Instead, it takes a broader approach. It actually holds a basket of different Bitcoin-related assets, like companies involved in Bitcoin mining or blockchain technology. This means that when you invest in BitB, you're not just betting on the price of Bitcoin itself. This makes BitB a more diversified option than IBIT, which can be a good thing if you're looking to spread your risk. Diversification is a key strategy in investing because it helps to mitigate the impact of any single asset's poor performance. However, it also means that BitB might not be as directly correlated to the price of Bitcoin as IBIT. This can be both an advantage and a disadvantage depending on your investment goals. So, if you're looking for an ETF that will move in lockstep with Bitcoin, BitB might not be the best choice. But if you believe in the broader Bitcoin ecosystem and want exposure to various aspects of it, BitB offers that opportunity. But if you're looking for a more diversified way to invest in the Bitcoin ecosystem, then BitB could be worth a closer look. It provides a way to gain exposure to the growth of Bitcoin-related industries, not just the cryptocurrency itself. Now, let's dive into ARKB, an innovative ETF managed by the visionary Cathie Wood and her firm, ARK Invest. Cathie Wood has become a household name in the investment world, known for her bold predictions and forward-thinking strategies. ARK Invest is renowned for its actively managed ETFs that focus on disruptive innovation, targeting sectors that are poised to change the world. ARKB is a prime example of this philosophy in action. ARKB specifically invests in companies that are deeply involved in the development and utilization of Bitcoin and blockchain technology. This includes a diverse array of businesses that are pushing the boundaries of what's possible with this groundbreaking tech. From Bitcoin miners who are the backbone of the Bitcoin network to companies developing cutting-edge Bitcoin payment systems, ARKB covers a broad spectrum of the Bitcoin ecosystem. The exciting aspect of ARKB is that it provides investors with exposure to a wide range of companies that are at the forefront of the Bitcoin revolution. These companies are not just participating in the market, they are driving innovation and adoption. However, it's crucial to keep in mind that ARKB is a relatively new and small ETF. This means it might experience more volatility compared to some of the more established options available. Investors should be prepared for potential fluctuations in value. But if you have faith in Cathie Wood's vision and are seeking a high-growth, high-risk investment, then ARKB could be a compelling choice. It's an opportunity to be part of a transformative journey in the financial world, driven by one of the most influential investors of our time. As the world continues to embrace Bitcoin and blockchain technology, the potential for future growth in ARKB is significant. This ETF could be a key player in the evolving landscape of digital finance, offering investors a chance to capitalize on the next big wave of innovation. EasyBC, simplicity at its finest. Let's talk about EasyBC. As the name suggests, EasyBC aims to make investing in Bitcoin as easy as possible. This ETF tracks the price of Bitcoin directly, meaning that it holds actual Bitcoin in its portfolio. This makes EasyBC a great option for investors who want direct exposure to the price of Bitcoin without having to worry about the complexities of buying and storing the cryptocurrency themselves. EasyBC is also one of the most liquid Bitcoin ETFs on the market, meaning that it's easy to buy and sell shares without significantly impacting the price. This is a big advantage for investors who value liquidity and want to be able to quickly adjust their positions. BTCW, riding the Bitcoin wave. Up next is BTCW. This ETF is all about riding the waves of the Bitcoin market. It tracks the performance of Bitcoin futures contracts, similar to IBIT, but with a focus on capturing the potential gains from both upward and downward price movements. BTCW uses a strategy called active management, which means that the fund managers actively buy and sell Bitcoin futures contracts in an attempt to outperform the market. This can be a risky strategy, but it also has the potential for higher returns. BTCW is a good option for investors who are comfortable with a higher level of risk and believe that active management can generate superior returns. BTCO, a steady bet on Bitcoin. Let's dive into BTCO. This ETF is all about providing investors with a steady and reliable way to track the price of Bitcoin. BTCO is designed to be a low-cost and tax-efficient way to invest in Bitcoin. It tracks the price of Bitcoin through a combination of Bitcoin futures contracts and physical Bitcoin holdings. BTCO is a great option for investors who are looking for a simple and straightforward way to invest in Bitcoin. It's also a good choice for investors who are looking for a tax-efficient investment, as BTCO is structured as a grantor trust, which can offer certain tax advantages. BARRR, the bold Bitcoin choice. Now, let's talk about BARRR. This ETF is not for the faint of heart. BARRR is designed for investors who want to go all in on Bitcoin and believe that it has the potential to revolutionize the financial system. BARRR invests exclusively in Bitcoin, meaning that it doesn't hold any other assets like stocks or bonds. This makes BARRR one of the most concentrated Bitcoin ETFs on the market, and it's important to note that this also makes it one of the riskiest. BARRR is a good option for investors who have a high risk tolerance and are looking for a way to maximize their exposure to Bitcoin. GBTC, the OG Bitcoin ETF. Let's move on to GBTC. This is one of the oldest and most well-known Bitcoin ETFs on the market. GBTC has been around since 2013, and it has a long track record of tracking the price of Bitcoin. However, it's important to note that GBTC is structured as a trust, not an ETF. This means that it can trade at a premium or discount to the net asset value of its underlying Bitcoin holdings. GBTC is a good option for investors who are looking for a familiar and trusted name in the Bitcoin ETF space. However, it's important to be aware of the potential for premiums and discounts when investing in GBTC. FBTC, the future of Bitcoin ETFs. Last but not least, we have FBTC. This ETF is relatively new to the market, but it has quickly gained popularity due to its unique approach to investing in Bitcoin. FBTC tracks the performance of Bitcoin by investing in Bitcoin futures contracts that are traded on regulated exchanges. This approach is designed to provide investors with a more transparent and secure way to invest in Bitcoin. FBTC is a good option for investors who are looking for a regulated and transparent way to invest in Bitcoin futures contracts. Outro: invest in your future. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more content like this. See you in the next video.